Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Mixed, mostly lower trade across the ag space overnight as data is becoming increasingly scarce by the day. Corn right now is steady to about a half cent lower. Bean prices are off about a nickel. Bean oil is down about 15 to 20 points, while meal is off just under a buck. Wheat, the shining star here this morning, currently about 3 to 4 better across the three classes. Yesterday's price rebound seems to be mostly technical in nature, fueled by speculative buying. We had funds buying about 4,000 to 5,000 contracts each in corn, soybeans, and soybean oil. A couple thousand contracts of meal while flat in the wheat. I'd expect to go another week here without commitment of traders data from the CFTC. That said, we have money managers short just under 100,000 contracts of corn and in Chicago wheat, about 115,000 contracts in the meal, while flipping back to very small long positions in both beans and in oil. U.S. harvest likely kicking back in full swing here as fields dry out from showers earlier this week, perhaps some isolated delays still in the southeastern region. Some scattered showers and light scattered showers activity over the central and north central Midwest this weekend. Otherwise, harvest really looks to be in full swing into early part of next week. U.S. soybean prices at the Gulf remain about a buck below offers from Brazil. That on a FOB basis is really into the end of the year, and this reflects the import differential into China. That said, I would expect U.S. demand to non-Chinese buyers to remain strong. U.S. corn is holding at about a 15 cent a bushel discount to Brazilian offers also into early next year. No export sales data today, and of course, no USDA production or WASDE data as well. We did get an update from the EIA yesterday on ethanol production, which showed it rebounded to 315 million gallons last week, up from 293 million the previous week. And that still remains below the pace needed to reach the USDA corn usage forecast of 5.6 billion bushels. South American weather forecasts remain crop friendly as showers are expected to start filling in across the west central and northern growing regions of Brazil by this weekend as they begin to transition into their rainy season. D's corn really stuck right now, still between its 100-day moving average resistance above the market at 423 and a quarter, and the 50-day moving average support down at 415. Looks like we might try to make another push here to push through the top end of that tight range. Inside trade for Nove beans is it failed to trade above yesterday's high at 1030 here in the overnight session. Pulling back here, also rejecting a trade over close over the 100-day moving average yesterday. We did have a fresh 3-week high for D's oil overnight before pulling back a little bit. A little change in the meal as well this morning as we remain stuck between $275 and $280 a ton. That basis the December contract. Beans continue to hold in a pretty tight range as well, despite the lack of demand from China. Obviously, this year's much lower acreage base here in the U.S. has held stocks in check. Gradually, attention will start to shift to South America as their planting and growing seasons get underway. A little bit of a bounce here on the wheat as both Chicago and Kansas City held support above their contract lows this week. Barring some supply disruptions, I would not expect prices to push too far to the upside. Do not look for a supply disruption out of Argentina as the Rosario Grain Exchange. They raised their wheat production forecast 3 million metric tons to 23 million, and that is compares to USDA forecast at 19.5. Thanks for listening, everyone. Have a wonderful day.